Hey everybody, today we're going to be doing a full complete breakdown of FHA loans versus conventional loans to help you figure out which one is the best loan, and specifically for your situation, whether you're looking to buy an investment property, or you're looking to your first time home buyer, or you want to buy a second home or a vacation home. We're going to cover all of that, and we're going to start with the first section, credit scores. Which one is better when it comes to credit scores? And I would have to give that to FHA loans because they allow you to get into a property with a lower credit score. The minimum credit score requirement is a 580 for FHA compared to 620 for conventional. Now actually, FHA loans will allow you to get in even lower. From 500 to 579, you can still get into a house, but you have to put 10% down instead of that magic 3.5% down. So FHA wins when it comes to credit scores, but let's talk about down payments, because as you can see, you can actually get a lower down payment with a conventional. But one thing to note is that this 3% down conventional, you can only use it one time. It's just for first-time home buyers. And well, the FHA, you can only really use it once as well. But a trick to use the FHA 3.5% down more than once is once you have an FHA 3.5% down, if you refinance that loan into a conventional, well, you can reuse that FHA again, and you can continue to use 3.5% down. Whereas conventional, once you use this 3% down, the next time you get a conventional, you're gonna have to put at least 5% down. But I would still give the cake to conventional on down payments because again, as a first-time home buyer, you can get a lower down payment when it comes to conventional loans. But when we look at mortgage insurance, we're also gonna see conventional as the winner. So these here, this stands for private mortgage insurance on conventional. And on the FHA loan, this stands for mortgage insurance premium. Different terms, but they mean and do the same thing. It's basically just an added interest onto the loan because you're putting down less than 20%. Different terms, but they mean the same thing, but they react differently. And the reason why conventionals is better is because once you reach 20% equity within the property over time, you can get rid of that PMI. You can get rid of that extra interest. So it might be an extra $100 a month taken off of your mortgage payment once you reach 20% equity. Now you have to call the bank and tell them when you reach 20% equity to get it removed. Otherwise, they won't remove it themselves until you reach 22% equity in the property. Now for MIP, the reason why that one's in red on the FHA is because if you put less than 10% down, that will never go away for the life of the loan. So the whole 30 years that you have this loan, you're gonna be paying that extra $100 payment on the FHA loan. But again, not a big problem if you plan to refinance out into a conventional loan. But it still does force you to have to refinance to get rid of it, and that's why we're gonna give the winner here to conventional when it comes to mortgage insurance premiums or PMIs. Now when it comes to DTIs, I have them both here in black because they're both about even. On average, they both allow up to a 50% DTI, that's a debt to income ratio. But they do have rare scenarios where the FHA will allow up to 56.9, but on average, even though they allow extra high, both of these will say they'll go up to 50% DTI. Most of the time they say your best chances of qualifying for a loan are if you have a DTI of less than 43%. So they're about equal there on the DTI, although I would say if I had to give an edge to one of them, it would go to FHA. Now when we look at property standards, this is referring to how strict are they on the kind of property that they can buy? Do they limit you on the type of properties that you can buy? Conventional definitely wins here. FHA, they're gonna have more strict regulations and rules around the safety of the property. They're gonna wanna make sure that it's move-in ready. So it's a little bit harder to get something distressed or something that maybe you want to fix up yourself if you're going the FHA route. Now there is another workaround around that. You can get what's called a 203K loan, which is essentially just a rehab loan where they give you the money to fix up the property, and then you can buy a property in almost any condition and it won't matter. But they also do have those kind of loans for conventional as well. They do have rehab loans. They're just not as popular. So all in all, they're equal there on the rehab loans. But if you're not going to do a rehab loan, conventional is a little bit more loose. Conventional allows you to buy investment properties, vacation homes, second homes. FHA, you can only buy a home if that's going to be your primary residence and you're going to live in it for at least 1 year. And then overall, which one's better? Generally, if you have a credit score that's 720 or higher, conventional is going to be your better bet. As your credit score goes higher, you get better and better rates. So conventional, usually you'll start to get better rates if you have a credit score that's higher than 720. But if you have a credit score that's lower than 720, you're probably going to be better off with the FHA and you'll get better rates there. Now overall, what's the best credit score to have, period? Generally, anything above 760 doesn't make a difference. So once you hit a credit score of 760, you're getting the best rates in the game and you're probably getting those conventional. If you guys think anyone else could get some value from what we shared in this video, whether a first-time home buyer or looking to buy an investment property, please share this video with them and also comment, subscribe, give the video a thumbs up. It helps out a ton.